Hello everyone, thank you for joining us this Saturday morning and welcome to the Specialist Trading Education presentation. Now today I'd like to answer the question, are you missing the big trending moves? Because I can't tell you how many emails and correspondence I get throughout the weeks about students or prospective students who tell me they really keep missing these big, powerful moves. They hear from either a friend or someone else trading that they got the big one, and they always seem to miss it. For example, let's look at something that happened this past year. This was this past summer, I believe. Yahoo Finance reported that Chevron was going to acquire Houston-based area upstream energy company for $33 billion. This was APC, or Anadarko Petroleum Company. So as we look at the chart here, we see that the stock was basically doing nothing, kind of going sideways to upwards a little bit, but then it gapped up tremendously on that news, okay? This is where students usually tell themselves, oh gosh, I was thinking about buying that. In fact, my analysis or fundamental or even that chat room I went to was saying that this was probably a good buy. It was possibly a takeover play, or either way, it was a good company, something to invest in. And I was thinking about it, but I never got around to it. And then all of a sudden the news comes out and I missed this big profit. So you say to yourself, well, maybe the news isn't going to pan out. It's still a good company, so I'll wait for it to go down, and then it goes even higher and ultimately gets, purchased. Well, today I'm going to share with you the entry rules to a method that was specifically designed to capture these big moves, where had you known this entry rule for this strategy in advance, you actually would have seen a signal that was generated right here a couple of weeks in advance, and then another one just the day before the news came out. And the strategy generated buy signals 2 weeks before the news and a 30-point gain. So you're going to learn all the entry rules to this particular method today. And on top of that, I'm going to share with you how simple it is to implement this on our platform. This is the PTS Primo charting platform, the educational platform that actually teaches you how to trade these big trendy moves. Now, we're always updating it. We're always adding new features. And I'm going to share with you how simple it is to trade on our platform. Welcome once again. My name is Steven Primo, President and Founder of Specialist Trading. If you're new to my webinars, we are all about one thing and one thing only, and that's simply educating you. Okay, I know a lot of students come to my webinars on Saturday or during the week and they say, well, Steve, I thought you were going to tell us what your picks were or what the best stock is to buy or what the best future is to sell or Bitcoin or currency pairs, what you think about those markets. Well, if you're coming to my webinar looking for those things, you come to the wrong place, because that's not what we do here. In fact, I think that that's actually why most students fail in trading. It's been upwardly estimated like 85%, because we've all been trained to ask someone or someone else what they think. I mean, think of it. How many times do you ask a friend or you go on TV to find out what they think about the markets? And that, is really silly, in my opinion. That's like a brain surgeon asking his assistant or the nurse next to him saying, what do you think? What do you think I should do on this operation? Or, someone on a airline asking their co-pilot, what do you think? How should I land this thing? Or how should I fly this? But traders do this on a daily basis, and we've all been trained to do this. This is really why most traders fail. You're taking yourself out of the game. You're allowing someone else to make your trading decisions. You go into a chat room or waiting for them on TV or waiting for the news, the earnings reports, or some jobless claims. And I'm only saying this from firsthand experience because I used to do the same thing. I've been trading for 42 years. In a couple of months, it'll be 43 years. And when I first started trading, I did the same things. I looked for all the earnings reports. I waited for all the earnings and jobless claims announcements. I was listening to so-called trading gurus to see what they liked and what they didn't like. And nothing really worked in terms of consistency. In fact, my first year or two, I thought I wasn't going to be on the floor any much longer. I was on the trading floor of the stock exchange because I thought that I was going to ultimately be let go because nothing was really working in terms of consistency. I'd have a couple of really good trades. I'd give it all back on the next one, okay? So my mentors taught me the things that I teach my students, and that is, in order to become consistent, you have to listen to one thing and one thing only, and that's the chart in front of you. So if you come here today looking for the best stock to buy or the best, time frame, really, that goes against our entire philosophy. What we try to do is educate you. We're simply educators, and all we do is, through my 42, going on 43 years of experience, educate you and teach you the things that have shown high levels of consistency. Why? So that ultimately you can make your own decisions. I never tell students what to buy or what to sell. I never tell them what the perfect stock is or perfect future is. That's up to you to decide, not me. It's just like, once again, I never, ask for a co-pilot to ask me how to fly a plane. That's up for me to decide if I were an airline pilot. Same way with trading. You have to make your own decisions if you want to be a consistent trader. If you want to be trading 10, 20, 30, 40 years down the road, the only way to do it is by trading something that has high levels of consistency and that you make your decisions. Not me, not some guy on TV, not someone in a chat room, okay? The good news is that's the gap we fill, all right? That's the service we provide. If you're thinking, well, Steve, I don't have enough experience, or I'm not smart enough, I didn't go to, business school, I don't know these things. Well, guess what? So I didn't either. I was taught these things as well. The same way many of you are struggling, I was struggling, I was taught the same way. So that's the gap I fill. That's the service I provide. With Pro Trader Strategies, we've devised these methods and the platform so that you can learn how to be in charge for the very first time of your own trading destiny, okay? Now, I'm going to show you the entry rules to a really great strategy that I was taught some 4 decades ago. But before we begin today, I ask that you please take a moment to view our disclaimer. We're required by law to share this with you, so please take a moment to view it. I'm going to show you a lot of performance results using the entry rules to this strategy, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples, once again, are strictly for educational purposes only. So, as you're taking a moment to view the disclaimer, if you haven't done so already, I see a lot of new faces here today. We have a good crowd, but if you haven't done so, please feel free to follow us on Twitter. You may want to copy down our handle right there, abbreviation for Specialist Trading. I post different things on a daily basis, signals that some of our strategies that we teach our students have generated, to little bits of financial wisdom, lots of great free education, so please feel free to follow us on Twitter. So once again, as I stated in the opening statements here, we are different from other companies in that our only purpose is simply to educate you. We are first and foremost an educational company. We don't keep statistics. We don't tell you what the pick of the day is or what to buy or what to sell next week. We don't believe in that. Once again, we're strictly educating you so that you can make your own trading decisions. As you see here, my goal is not to force feed you signals. It's not to tell you how or what to trade. My goal is simply to teach you how to trade with the specialist edge. The same edge that really has sustained me, the same edge that was taught to me some 42 years ago. Hopefully it will be able to sustain you and get you going in the future to trade some 40 years down the road. Now, since this is going to be conducted like a class, once again, I love to take as many questions as possible, but if you're new to my webinars, I like to take the questions at the end. So if you have a question, please wait till the end of the presentation. It won't be real long, probably maybe about 20, 30 minutes. And the only question I will answer is the most common, and that is this being recorded? Yes, it is. I record all the webinars. Believe it or not, I believe about 3 months ago, I recorded an entire webinar. I think it was on a Saturday, and the microphones weren't working. In fact, the microphones were broken, and I spoke the entire hour without you hearing anything. So don't worry, we will always send you a recorded link to the presentation, or if it doesn't come through, we'll re-record it again and send it to you so that you always have a copy for your archives, okay? So once again, if you're having technical issues or you can't hear, can't see, don't worry, we will send you a link to the recording, and please wait till the end of class to ask any questions. All right, with that said, let's begin today's presentation. And what's the strategy we're going to be talking about? Strategy 3A. This is a great strategy for design strictly for trading those big trending moves, okay? So let's talk about some of the highlights. There are different types of methods, different types of categories of strategy. The category this one falls under is a continuation strategy. So what does that mean, continuation? Well, it means you're not trying to pick a top or a bottom. You're not waiting for a specific area to be hit. What you're doing is you're looking for a trend to be established, all right, the beginning of a trend. And once it's established, usually what happens is after it's been established for a while, it goes into some type of pause or holding pattern. That's where we look to get in, because hopefully the trend will resume in the same direction. In fact, even stronger than when it was before. So this is a continuation of trend strategy. Now, how do we do this? Well, we do it by applying a unique Bollinger Band setting, okay? This is a setting usually reserved for the students of this particular course. The students have purchased this course in the past, but guess what? Today I'm going to share with you what that setting is. Now, it's designed to trade quick, powerful trends. So obviously, if you're going to be trading this, a powerful trend will, sustain itself for a long amount of time usually. So you can be in there for a while. But we teach you all the different exits, all the different stop placements, all the different types of entries in the course. So everyone, will get the same basic setup, which I'm going to be teaching you today. But how you decide to enter, how you decide to exit, how you decide to place your stop and protect yourself, how you decide to track the trade if you like, is entirely up to you. And we teach in the course all the different variables. That's why we can't statistically measure anything, because we encourage everyone to trade it differently. There are literally dozens of ways to trade this, if not hundreds of ways. So how can we keep stats on each and every one? Okay. So we're just sharing with you the high probability setup for this and how you can generically enter it. Now, the beauty of 3A is that you can apply it to any market, any time frame, and any direction. I'm going to mainly focus on showing you and displaying stock charts, but don't get caught up in thinking, well, this only works for stocks. I really don't trade stocks. It'll work on anything. I use this actually preferably on the E-mini futures. Remember about 2 months ago, I guess, when we had that real strong downtrend in the market where everyone thought, I guess there was some news about the tariffs or something, where the market went straight down and that this is it, we've topped out, the markets are going straight down. Well, once again, at Specialist Trading and Pro Trader Strategies, we don't focus on the news. We really don't care. I stopped looking at the news some 40 years ago. All we focus on is the direction of the market and the intensity. If you see a strong, intense market, either moving up or down, this is where this strategy can really come into play. So that was, we had a lot of students who said, gosh, Steve, this works so great when we were going straight down there. Yeah, it works fantastic in those strong, trendy markets. But please, I know your eyes may light up after I show you some of the recent examples of this method. Please, as always, we require, regardless of what method, regardless of what time frame, you all have to paper trade first. Because I can almost guarantee you that the majority of you trading this, if you want to trade this on Monday, will most likely lose money. And you'll say, this doesn't work. This guy, Steve, just taught me something that's just faulty. It's just he's just a vendor. He's just throwing away stuff that doesn't work. That's not true. Most of the time, I'll get emails back from students telling me that. And then I say, well, listen, can I see your example? Send me the example of what you traded. And then I'll review it. And 9 times out of 10, the reason they lost money is because they implemented the rules incorrectly. They didn't take the time to study it, to understand the process. They didn't paper trade first. They just jumped on in without really understanding the process. And the rules were all incorrect. And that's why they lost money, not because the strategy was faulty. So that's why we always say, paper trade this method first. There's so much more you can learn from that simple process. I still paper trade. Someone would say, well, Steve, you've been trading for like 4 decades. You still paper trade? Sure. In fact, I'll be honest with you. I have an idea of a method I'm researching now, and I'm going to be paper trading this for the next couple of months probably, because it's only based on daily bars. And so I have to wait for these signals to generate. I'm going to paper trade it. So I still paper trade. If I can do it after trading for over 4 decades, I'm sure you can still paper trade. Now, our edge here is consistency. All right. It's not about every trade being a winner. Consistency means we're aware that there will be losses every once in a while. That's okay. In fact, I'm going to show you a couple of examples today where there were losses. But so then you would say, well, what's so good about consistency? Well, consistency is a method that's able to make back and recoup those losses. That's what you want. See, too many traders get caught up in this get-rich-quick scheme where they find some webinar or some guy selling something that hasn't lost in the last 10 years, okay? And so they'll trade it, and guess what? They'll have a couple of winners, and they go, this is great. I'm making really good money. And then they have one loss that comes out of the blue, and it gives everything back. All right? That's not a consistent method. What you want is a method that has this 2-step forward, 1-step back approach. An idea that was instilled in me because I was trying to search for that, brass ring. I was trying to think, gosh, I just want to have the big ones all the time so I can be able to retire. I can make $1 million. And sure, that will, I'm not saying you make $1 million, but that big hit will come every once in a while. But usually what comes after that is you give it all back because those methods are not consistent. They're designed to go after the big one. But if you're going after the big one, your risk is usually very high. And so if it doesn't happen, you can risk a lot and give it all back. What we want to do is have a consistent method that's able to be aware that you will have losses. And if you do have a loss or two, be able to recoup them really quickly. And then you're back on track again. That's what all of our methods have instilled in them, high levels of consistency. Okay, so let's talk about the setting for this, and we're going to be talking about Bollinger Bands. Remember, that's the setting that we're going to change and alter for a proprietary setting. But let's just give you a refresher course if you're not familiar with Bollinger Bands and how they work. I'm not going to go into the inner workings of Bollinger Bands. I honestly don't understand them myself. They're a great indicator, but I really don't care. I just want to be able to use them. So the only thing I can tell you on the standard settings of Bollinger Bands, there are 3 distinct bands. They have a middle, an upper band, and a lower band. All right. The middle band is just a 20-period simple moving average. That's all it is. It's nothing, very complicated. The only thing that differentiates it is the upper and lower band. And they are set at a deviation. That means the distance from that middle moving average. So the standard setting is the moving average is set at 20. The upper band is set at +2, and the lower band is set at -2. That just means the distance they are from the middle 20-period moving average. So if we look at an older chart here of Facebook, here's the standard setting. Here's the way they look. You can see here's the top Bollinger Band in blue. Here's the middle one in red, and here's the bottom one. Now, the conventional wisdom tells us that whenever there's a constriction where you see the top line going down and the bottom line going up, they're kind of constricting here, this is usually followed by some intense volatility, okay? It's a great tool, don't get me wrong, but it's not going to be applied this way for what we need with strategy 3A. So here are the proprietary settings. Here's what we're going to be changing. And remember, you can copy these down, but don't worry if you don't copy them down or don't get them. This is being recorded. You can look at this and then copy it down or save it in your archives on the recording when we send it out to you. All right, we're going to leave the moving average the same. That's the middle Bollinger Band. It's going to be set the same at 20-period simple moving average. The only thing we're changing are the upper band deviation and the lower band deviation. That's the distance they are from the middle moving average. So instead of it being a round number at 2, we're going to go down to fractions. The upper band deviation is set at plus 0.382. The lower band deviation will be set at negative 0.382. Okay? Now, this is very simple on your platform, whatever charting software you use. All you have to do is go into the edit box of the indicator you're using. And when you see the moving average, keep it at 20. Where you see the upper and lower deviation, just set them to 0.382. Sometimes they ask for the upper and the lower. Sometimes they just ask for the deviation, and they know that that's going to be the difference on both sides, okay? Now, don't ask me. I know a lot of you are saying, oh, well, this is some big Fibonacci strategy, right? Well, I know that's a Fibonacci number. Don't ask me the inner workings of that. Remember, it's nothing mystical. This is not a Fibonacci-based method. This is the setting that my mentors taught me. They allowed me to experiment with it, and trust me, in the last 4 decades, I tried it with different settings, different numbers, and over 40 years, these seem to be the best setting for this particular method. Now, if you don't have Bollinger Bands or aren't able to edit this, ask your tech support at whatever platform you're using. You should be able to have them change it for you. I know a lot of students say, well, Steve, I don't have this capability to change it. The tech support told me we can't edit the moving average or the settings on the Bollinger Band. Can I use another indicator? A lot of students have experimented with envelopes, with Keltner channels. I have as well to accommodate students, but trust me, nothing works like this setting for the Bollinger Bands for what we want to do. You just will not get the same results. So I'm sorry, if you're thinking about using another indicator or something else, you won't get the same results, so I would not suggest doing that, okay? You need to have this setting on the Bollinger Band. Okay, so here's what the standard setting, remember we're looking at an older chart of Facebook, remember what the standard setting of the Bollinger Bands would look like. And now when we use our proprietary setting, look how it changes. It's much more smoother, it's much smaller, and we have kind of this flowing river effect to it, okay? This is going to help us determine our entries for strategy 3A. All right, so let's go through the strategy 3A buy, entry rules, and process, all right? Now remember, these are for buy setups. Obviously, if you want to go short or sell, you'll just reverse these rules. But let's just focus on buying right now. They're very simple, and this is just the entry process. I know a lot of you are going to say, well, Steve, how come you can't give us the exit rules? How come you can't give us the stop placements? Well, that would, wouldn't be fair to the people who purchase the strategy. So I can't give away everything, but I'm giving you probably the most important, which is this setup to go along. Okay, step 1. What you want to do is plot the proprietary Bollinger Band setting on your chart. Obviously, remember, this could be a 5-minute chart of the futures, Could be a weekly chart of the of any stock you're looking at. Could be a 4-hour chart of the I should say currency pairs. It makes absolutely no difference what market or what time frame. All right, so we see here in this older chart of Amazon for educational purposes, we have a blank chart. Let me share with you how simple this process is on our platform, because as I stated earlier, I distinctly told Pro Trader Strategies when we developed this platform, I want this to be as simple as possible. I want everything to be right there, pre-formatted, so that the student can focus on the trading aspects and not have to worry about how to load a chart, get a scan, go through the indicators. It can be there with one click away. So let me share with you how simple this is on our platform. All right, so once you load a chart, the first thing you want to do is your trading strategy 3A. So on our upper green strategy tab here with all our methods and strategies, you would simply click on strategy 3A. When you click that on, a drop-down menu appears. Click on indicator. And right then, you'll automatically see the pre-formatted Bollinger Bands right here. So there's nothing you need to do. Not like if you had another platform and you had to say, okay, well, I've got to go into the indicator-based portion of this platform. Now I've got to find the indicator. Now I've got to pre-format it to the settings. Now I've got to hit enter and hope it's right. You don't have to do that. Just one click away and it's right here. It's already pre-formatted, okay? All right, let's go to step 2. You want to look for 5 consecutive price bars, regardless of what time frame or what market, to close either on or above that highest Bollinger Band. All right, so let's go back to the chart. We have the Bollinger Band setting here. We want to see 5 bars either close on that top Bollinger Band, that top line, or above. So we see here that we have 1, 2, 3, 4. Actually, we don't know where this was because we could have already been in a signal. Let's just start right here. All right, we're below, so we have to start here. Okay, 1 above. All right, 1 below, 2 below. All right, this closed above. All right, we're, so we don't have enough until we get right here. 1, 2, 3, 4, 5. All right, that's the count. You have 5 bars closing above. Now that's your setup. What we want to do is make sure that we, accurately counted and we had the right setup in place. So the way to check your work, because remember, this is an educational platform. We teach you the rules in the course, but we want you to check your work. So right here you think, okay, we're not looking at bars below, we're looking at bars above, and I see 5 closes above. Check our work, so that should be a valid setup. Go to strategy 3A again. This time when the drop-down menu appears, click signal arrows, because this tells you if it's a valid setup or a valid signal. And yes, you have a green arrow right here, so that's a valid signal. So you're learning how to do this on your own. Ultimately, you won't need to have the use of the arrows anymore, but this is a way to check your work. All right, so that's a valid setup. Does that mean we're going to buy at the market? No. Here is step 3. We're going to enter to buy when price trades 1 tick above that 5th bar. Now, that could be 1 pip over trading currency pairs, but it should be 1 unit of measurement. So this is where we want to buy. It has to trade here. Let me go backtrack. Notice I said enter to buy when price trades 1 tick above. I didn't say when price closes. It's just when price intraday trades there. So many times it'll trade here and then close lower. That's okay. Don't get worried and say to yourself, oh, this doesn't work. I got in at the very top. Don't worry about it. You want to just enter when price trades there. So you can have a stop buy there. You can be in front of your computer and just hit market, buy at market. It's whatever you want to do. All right, now here's the one caveat. Here's the one thing I would suggest. Let's say on the next bar, we don't trade there and we go lower, okay? And then the next bar, we still go a little bit lower, go sideways. It's still okay to wait. You're still going to be waiting for it to trade here. Here's the only suggestion I would give to negate this trade. If nothing happens on the next 2 or 3 bars and then you have a bar that closes below that highest Bollinger Band, I would negate the signal. I would say, okay, all bets are off. We're not going to take this trade. Why? Because usually this means that the trend has changed or it's run out of steam. Not guaranteed, not 100%, but usually that's what it means. And so it's best just to look for another count or look for another setup in another market, another time frame. But most likely, the market's telling you that we've run out of steam and this setup is probably not going to be a good one. Okay? So let's see what happened with this one. Well, we were lucky enough, this one traded there on the very next bar, so we've entered, and we actually got a little profit on the day. Now, I know a lot of you are going to say, God, this is great, Steve, so where do I place my stop? Where do I exit? Once again, those are all information that we give. In fact, we give you different variables on how to do that in the course. But this would have been a great generic entry, just using the standard generic entry plan I just gave you, because look what happened after that, okay? You had a nice run in Amazon, and obviously you could have potentially captured all those points. That's the big trendy move we're talking about. So no longer will you have to, always sulk and always play the victim game the way traders love to play the victim, like, oh, how come I never get those big moves? How come I missed that one? I was thinking about getting into that and I never did. You have a method here that's designed to capture those. Not guaranteed you're going to get every one, but it's designed at least to get you into those. All right, so let's look at some recent 3A examples and the trading process you would go through on our platform once again, just so you can see how simple this process really is. We designed it and developed it with one thing in mind, to make it simple so that you could concentrate on learning how to trade these as opposed to trying to figure out how to load a chart. This is all going to be done on our platform. I would say about every quarter we come up with tons of new different features, tools, ways in which to trade. This is the educational platform that teaches you how to trade those big trending moves. All right, first thing you want to do, remember, I don't care if you plot a 5-minute chart, the E-mini on our platform, if you chart currency pairs, if you chart Bitcoin, you can chart all those different markets. We give you the data for all of that. You want to plot the indicator, which is the proprietary setting for the Bollinger Band if you're trading strategy 3A. So once you click that on, you'll see the indicator automatically be formatted. Nothing you need to do, okay? All right, so now if we're trading strategy 3A, we want to see that there are 5 closes above the Bollinger Band, okay? We have 1, 2, and then we go below, so we can't use these. We have to start the count over, and all of a sudden we see a number of consecutive bars above. So that's 1, 2, 3, 4, 5. All right, let's check our work. Let's see if we're in line with the strategy. We come up to the green strategy tab, click on strategy 3A, drop-down menu appears, click on signal arrows to check and see if we're learning this process. And yes, there's a buy arrow there. Now, does this mean we're going to buy at the market? No, that's not part of the strategy. This is where most students fail. We can only buy if we trade 1 tick above there, right where that green horizontal line is, okay? Now, we can wait as long as we can, but the only reason why we won't wait anymore is if the price comes down and closes below. Now remember, that's only if we haven't entered yet. Let's say you enter and then price kind of runs out of steam and still closes below. That doesn't mean you exit. That's not your exit plan. The exit plan is taught in the course. All right. All right, so let's just see if we entered on the next bar. Well, yes, we did. And in fact, Apple actually gapped up. So you have a choice here whether you want to enter. This is why we say we do not keep statistics, because a number of our students would have said, well, I'm not entering on this, and you have a right not to enter. And we're not going to tell you have to enter, because a lot of students don't like to buy on a gap up. I can understand that. I most likely probably wouldn't do it myself. A lot of students will still say, no, I have a big account. I'll buy up higher. That's okay. Well, that would have been probably a wise decision in this particular setup, because look what happened after Apple went up 30 points. All right. Most students would say, gosh, I missed this Apple trade. How come I always miss these big moves? Well, it was telling you right here that this was a valid buy setup. I know a lot of students would say, well, Steve, how did you know? We don't know how high something will go. We never predict how high or how low something will go. All we are doing is listening to the market and jumping on board. And then we track it either using a fixed exit or trail it with a trailing stop. It's up to you. Once again, there are literally dozens of ways to trade this once you know all of the rules. All right, so let's click on indicator. We're going to look at another stock now. Let's say we're looking at Yum Yum, okay, Yum Yum Donuts, okay, YUM. We click on the indicator, and now we have our proprietary Bollinger Bands. Well, we can't look for any buy setups here because we don't have 5 closes above, but what do we have here? We have 1, 2, 3, 4, 5 closes below. Even though this is flirting with it, we're still below. So we've counted this. Is this a valid sell setup? Well, once again, how do we check our work? Click on strategy 3A. The drop-down menu appears. Oops, it's indicator there, but we should say click on signal arrows. And we are right. We have a valid setup to go short. Now, someone will say, but Steve, the bar went above that lowest Bollinger Band. You said not to short. This is where students don't study the rules. And I said, remember, you have to have 5 closes, not intrabar, but closes either on or below. This close is just below, so that's a valid setup. So does this mean we sell at the market right here? No, because what happens if the very next day we go right back up? What we want to do is sell if we trade below. And someone could say, but Steve, that means I'm going to sell at a lower price there. Isn't that bad? I thought we're always supposed to sell high and buy low. Well, once again, that's traditional wisdom that really has no levels of consistency. What we want to do is confirm that we're going in our right direction. How many times have you sold something and it continues going straight up, right? We don't want to have an inconsistent method like this. We're okay with selling at a lower level as long as we have more consistency and more odds in our favor that it's continuing in that direction. We never want to bet that we'll get in at the top, all right? There's no such thing as getting in at the top or getting in at the bottom. All right, so we waited for a couple of days, but ultimately it got there. Now remember, the very next day we were inside the realm of this Bollinger Band setting, but where did we close? We still closed just below. It's hard to see, but we're still below it. So this is still a valid setup. Remember, we said if it closes above this lowest Bollinger Band, then all bets are off. But it never closed there. Even though it went at above, look where it closed, just below. So it's okay to still wait. Then the next day was lower, so it's okay to still wait. And now we got in on the third day. So we're short YUM, quick 13 points to the downside. Because of the gap, someone could say, well, Steve, how did you know it was going to gap down? Do you follow the news? There must have been some earnings report or something why it gapped down like that. It's not required. In fact, news is not required in any of our methods or techniques. So there's no reason to follow the news. If you want to look at earnings or fundamental news, that's fine. But I stopped looking at that 40 years ago, and I'm still trading. So I'm living proof that it's not required to look at that. All right, let's look at MUSA. Now, this is what we mean by consistency, meaning that not every setup's going to work. Here's a valid setup. We have 1, 2, 3, 4, 5 closes. The software generated a sell signal. We got short on the very next bar. All right, so we're probably all excited, thinking we're going to make money, and then look what happens. All right. If we used one of our standard stops, we most likely would have been stopped out. Let's say we lost 5 points. Okay. Now, this is where traders like to play the blame game. They like to say, this stuff doesn't work. The very first trade I get into, I lost money. All right. Remember, it's not guaranteed with a consistent method that every trade's going to be a winner. That's okay. What we're looking for is a method that's able to recoup the losses sooner than later. Now, if you had just done what so many traders do, it's go sulk in the corner and say, I'm not going to look at this stuff anymore, you would have missed 5 consecutive bars closing above. All right? And what is that? That's a setup to go long. So had you waited and gotten sulked, you would have missed this buy setup. You could have gone long a week later and quickly made back that 5 points and maybe even more, 25 or 30 points more. This was MUSA coming into this first week of November, okay? How about SHAK, S-H-A-K, all right? We're below the lowest Bollinger Band, and then we close above it right here. So we can't have a countdown. We have to start over. And here's the new count. 1, 2, 3, 4, 5 closes below. We check our work, and yes, there's a valid signal to go short. But we're not going to sell at the market. We have to wait for it to trade, not close, but trade 1 tick below. We waited for 2 bars. Ultimately, it did. And this is where students, once again, have trouble. They say, well, Steve, I waited for it. It traded there, but then it closed higher. So I stopped myself out. I got out because I was having in a losing trade. Remember, you're stopped. You have different places to stop. We teach you somewhere here, somewhere in the middle. There's different places you have to decide. But that's not a stop place just because you entered and it closed going against you. The proper thing to do is just keep your stop in place, enter to go short, and you could have taken advantage of that 17-point quick drop in the next week. Once again, a big gap down. We had no reason to know or even care why it gapped down. All we know is that we're short. We don't really care what the news is. ABMD, okay, we have 5 closes above once again. It's a valid buy signal. We're only going to buy if it trades 1 tick above, does not have to close there. Well, we waited 2 days, but ultimately we would have bought and 32 points in 3 days, okay? See how it catches these big trendy moves? Here's an example in McDonald's, MCD. We're above the highest Bollinger Band, but then we quickly cross below. We have 1, 2, 3, 4, 5 closes below. We want to go short 1 tick below. We see that we did, and once again, we got short and it closed towards its high. This is where students get scared. They stop themselves out. They say, Steve, I've got a big loss my first day. I mean, I don't want to trade this. Well, look what happened. All you had to do was wait a couple of days, and you could have potentially captured 20 points going your direction in the next week. Let's look at Tesla. We all know that Tesla's had some rather big moves. Now, I know that not everyone's able to purchase the stock of Tesla, but you could have purchased options. Remember, how you enter and what vehicle you choose to trade with is entirely up to you. We're not telling you you can't trade options with this. That's your choice. Remember, we're not here to tell you that you're supposed to be trading stocks or options. All we're here to do is just to simply tell you that we want you to know how to identify a high probability setup. How you decide to enter is up to you. If you want to trade options, stocks, futures, that's your choice. We're not teaching you what the vehicle is to trade this with. So here we have 1, 2, 3, 4, 5 closes, okay, above the highest Bollinger Band. The signal is generated. It's a valid setup, but you want to buy one tick above. You would have purchased on the very next bar, options, the stock, and then potentially in a week or so, captured 80 points. Now, did we know it was going to go up 80 points? Absolutely not. But the market told us that it wanted to go higher using this really simple strategy. And so who are we to argue with it? You know, most traders lose because they're betting against what the market wants to do. We've always been taught to buy low and sell high. But if that works so well, picking tops and bottoms, why do, once again, 85% of all traders fail? Because there's no consistency in that. It's much better to, as I always say, trade with the current at your back. If the market is going higher, we want to be a buyer. If the market is going lower, we want to be a seller. You never argue with what the market wants to do. All right, now remember we opened up today's presentation with that report earlier this year about Yahoo Finance reporting that Chevron wanted to acquire APC. And if we look at the chart, here's where the news came out. How could we have taken advantage of this, okay? This is where students love to complain and say, gosh, yeah, that news really got me. If I would have known, I would have bought this. Okay, woulda, coulda, shoulda. But how do you really take advantage of this? Well, by listening to the market, because the market tells you just about everything you need to know. There's no reason you have to try and follow and figure out if there's going to be a buyout rumor. The market's telling you already. The first thing you do is click on 3A, if you're going to trade this method, click on indicator, and we have the Bollinger Band setup. All right. Now, prior to this announcement, we had a setup right here. 5 closes above. 1, 2, it's hard to tell right here, but this actually closed on or above 3, 4, 5. So we checked our work, click on signal arrows, and yes, this was a valid buy setup, but we're not going to buy until we get right here. See, this is why we don't buy, because had we purchased this, look what would have happened the next 2 or 3 days. You most likely would have said, oh gosh, I've got 3 days of losing here. I'm going to get out of this. And you would have scared yourself, thinking that this was a faulty trade. So no, you know what? That's why we say if we close below this highest Bollinger Band, just negate the trade. So we're not going to be in this. Now, don't just go sit and complain and say this stuff doesn't work, because guess what? Another setup was generated the following week. 1, 2, 3, 4, 5 closes above. We check our work once again, click on signal arrows, and yes, that's a valid setup. So we want to buy 1 tick above, and on the very next day, it's hard to see here, but we traded above there. We didn't close above, because had you purchased above there, you would have had a losing trade at the end of the day. Once again, where most students would say, I went long, I bought the options or I bought the stock, and I'm already losing. That's okay. Remember, you got to give yourself some time and some room to grow here. And this one would have been a very nice trade, because you wouldn't have had to wait more than 1 day, because the very next day the news came out. Excuse me. Now, once again, students would say, well, how did you know that? Do you guys, do research on all the companies, the buyout rumors and stuff, and you go through the list and your proprietary research study, all the earnings and all the plays? No, I don't even watch any of the news shows on TV. There's nothing in there for me, because all the information I get is from the chart in front of me. If you feel you need to look at news, and I'm not going to stop you. Remember, we're not here to tell you how or how not to trade. I'm just teaching you high probability setups that have stood the test of time. And these setups don't require any news. So if you don't need it, there's no reason to look at it. So I'll be honest with you, I didn't trade this, but had I traded it, I most likely would have gotten out on the news. But if you're one of the people that like to stand for as long as possible, well, guess what? You could have captured 30 points holding on for about another month or so. All right, so let's look at some different markets. Let's look at some older slides just to share with you that this can be applied to any market or time frame. All right, here's an hourly chart of the E-mini futures. All right, 1, 2, 3, 4, 5 closes above. It's a valid buy signal. We enter the same way, one tick above, and in the next day or so, you could have generated 12 points to the upside. Now, most students would have said, well, Steve, look, we've already gone up so high, I can't buy up here. Well, you don't have to. Remember, this is not a system. We're not telling you have to take the trade. We're just telling you that these are high probability setups. You could have possibly generated $600 per contract if you stayed in this long. Now, some of our students like to get out a quick point, maybe a quick couple of points. It's up to you. We teach you all the different ways in the course. Here's a 10-minute chart of the E-mini. All right, we close above, so we can't use a count back, but now we have 1, 2, 3, 4, 5 closes below. It's a valid sell signal. We're not going to sell at the market because for all we know, it could have gone up like this and then gone straight up. What we want to do is wait for it to trade one tick below, and it did. We entered short on the very next bar of the 10-minute time frame, 17 points, or potentially could have captured $850 to the downside, okay? Or if you wanted to take a quick point, we have a lot of students that do that. There's no one right or wrong way to trade. Here's the older example of the Canadian dollar. 5 consecutive closes below. The same process is applied. There's a valid sell signal, but we're only going to sell if we trade 1 pip below right here, as long as it doesn't close above this highest Bollinger Band, or this lowest Bollinger Band, I should say. And on the very next bar of this daily bar, we went short the Canadian dollar. 642 pips. Remember, we had no idea it was going to go down this far. That's over $6,000 per unit if you were held on that long, potentially. But you could have taken a 10 pip gain, a 50 pip, 100 pip. It's up to you. All we're doing is listening to the market. It tells us what it wants to do by applying a few simple rules, and then we jump on board using some structure. Okay, so let's recap before we go into question and answer portion. Remember, this is a continuation strategy based on a unique Bollinger Band setting, which I just shared with you. It's designed to trade quick and powerful trends. The beauty of 3A is that you can apply it to any market, any time frame, and any direction. The majority of the examples were stocks, but you can also apply it to futures, currency pairs. Remember when Bitcoin was taking off a couple of years ago? We had some tremendous setups using strategy 3A with Bitcoin, okay? But please remember to paper trade. If you want to start trading this, go over this process through the recording we're going to be sending you, or just from what you've written down today, so that you really fully understand. I don't want you to lose money because you're implementing the rules incorrectly. There will be losses even if you implement the rules correctly the way I share with you. That's okay. But if you're having losses because you're trading this on incorrect data or incorrect rules, that's something that we don't want you to go through. So study it and paper trade it till you fully understand the process. Our edge here is consistency, meaning that there will be losses, but it has a high level of ability to recoup those losses, okay? Okay, so ask yourself, do you think this strategy could have helped your trading this past year? If you didn't trade it, what about going forward in 2020? Do you think it'll get you going in the right direction? We have a great offer for all of you today, taking time out of your Saturday today. It's a great, great offer. Let me tell you, in a few minutes, I'm going to share with you how inexpensive this offer actually is. We're going to offer you Strategy 3A course, all the entire rules. I just shared with you the basic, most generic entry process, but we're going to get all the different entry points, different exit points, different stop placement, ways to trade this, on top of being able to apply it on the platform for 30 days, okay? Now, we're not going to just give you that. Here's what's also going to be applied on the offer here. Obviously, you're getting trading strategy number 3A. You're getting our enhanced buy sell line features. These are 4 different ways to see what the overall trend is. You're getting some short-term trend identifiers that are based on patterns, okay? We have this for you. One click away, you can see where the short-term trend is. We're also going to give you our signal scanner. Now, let's say you're not able to be in front of your chart 24/7, okay? You have a day job, you come home, you like to see what the setups are. Let me show you the simple process for scanning for Strategy 3A setups on a nightly basis. Once again, you go to the green Strategy tab, click on Strategy 3A, click on Scan, and you'll see this window up here, all right? Strategy 3A scanning window. Click on Load Symbols. Now, we provide you with multiple symbol lists, anywhere from futures, currency pairs, Bitcoin, NASDAQ, S&P 500, the DAX exchange, European exchanges, Asian exchanges. Whatever one you want, you simply click it on. In about 30 seconds, you'll see the list. I believe this is the Dow 30. Once the list appears, all you have to do is click on Scan. And in about 30 seconds, you see a series of red or green horizontal bars. The red bars means there's a sell signal in the corresponding stock. The green ones mean there's a buy signal, obviously. Now, let's say I had given this presentation a month or so ago, all right? And you're a member of this course, and you click on the scan, and you see that it has a setup in Beyond, B-Y-N-D, all right? Now, you say to yourself, I don't really understand why it generated a sell signal, but I've taken the course, and let me check my work here. I apply the Bollinger Bands. I see we have 1, 2, 3, 4, 5 closes below, all right? It's below the lowest Bollinger Band, so that's a valid sell signal, and it scanned this for you. So you would have seen the setup already on the scan page. So that night you could have said, okay, well, you know what? I think I may be out of puts, or maybe I'm going to short this stock, or maybe I'm in this stock. Maybe you invested in this, and you say to yourself, you know what? If this trades at the entry point, I'll just exit my position, because if it's a good sell signal, I don't want to be long this, all right? So that's where you enter, and you waited 2 or 3 days, but ultimately you would have gone short or exited. You see here how we had to wait, but we never closed above that lowest Bollinger Band, all right? Well, this would have been a great trade because Beyond has dropped 50 points in the last month. Now, this chart was going into the 6th, which was just last week, I believe last Wednesday, okay? So do you think this strategy could have helped you? This just happened, okay? This is just something that you could have taken advantage of. And using our scanner, it would have scanned for this, and you would have seen it on the scanning page on a nightly basis. You're going to get this additional feature. Included with the scanner, you're also going to get over 90 of the most prominent technical indicators. You're going to get a great feature that I developed with Proprietary Strategies. This is our Strength of Trend tool. It can tell you with a really high consistency whether there's still strength in a trend or whether it's running out of steam. Great tool to have for any method or any strategy you're trading. And lastly, this comes with great personalized tech support that will resolve any issue you may have in a matter of moments. All right, let's break this down. This is the trading educational platform you've been searching for because it gets all this one click away. Normally, the Strategy 3A full online course along with 30-day usage of our PTS Primo charting platform would run close to $600, or $500 I should say, I'm sorry. But we're not going to charge you $500. Actually, we're going to discount this to only $12. You're going to get all of this for $12, but this is for a very short, limited time only, so you have to take advantage of this. You don't want to sit on this and say, well, you know what? I saw that webinar Steve gave a couple of weeks ago. I'm ready to do this. I've been paper trading, and this stuff really works, and I want to get that platform 30 days, and I also want to have all of the rules to Strategy 3A, so I'm ready to do this. So you call up Proprietary Strategies, and they said, I'm sorry, that offer has already died, and now you're back to have to purchase this for $500. For $12, that's probably less than the price of a cup of Starbucks coffee this morning. You can get all this for 30 days. Plus, you'll have Strategy 3A, all of the rules for life. So Strategy 3A doesn't go away. You'll get that online course, but being able to implement it on our platform is priceless. That's only $12. So here's how to take advantage of this. Contact Proprietary Strategies. If you have more questions, you can call them directly at area code 310-598-6677. Or you see that link at the very bottom, that will take you to the sign-up page so you can get take advantage and get there really quickly and take advantage of that $12 offer. Now, we have a live link posted on the chat box on the GoToWebinar column on the far right. So if you want to click on that instead of copying and pasting the link on the screen in front of you, you can do that as well. This is a great offer, folks. I'm telling you, $12, you're getting Strategy 3A along with 30-day usage of the platform. I can't think of a better way to you to become acquainted with our educational applications and features, and I can't think of a better way for you to become a student of mine for such a cheap, inexpensive price, okay? All right, now, as I promised, if you have any questions, now's the time to ask. So just go to your question and answer box, and all you have to do is simply click on the question and answer and type in your question, okay? Question, do we need to use the PET D for this strategy? No, the PET D is not required. If you want to, you can. It's up to you because remember, there are a number of ways to add consistency to this, but the Strategy 3A in its most basic form does not need the PET D, okay? A lot of students like to apply the PET D. That's another feature I didn't speak about. It's usually a more higher price tool, but it's something that we also talk about in our weekly webinars, that is used great. One of its functions is as a signal confirmation tool. You could do that as well with this, but just to get the standard basic, no, you don't need to apply the PET-D. Another question, what if I want to apply this on my platform? Well, you can, right now you know the rules. We're not going to give you the add-ons. That's something that extra. Sometimes we do offer the up and down arrows along with the proprietary format for the Bollinger Bands, and you can apply that on, let's say, like TradeStation, NinjaTrader, Sierra Charts, MT4, Metastock, but that's not included in today's offer. So let's say you use TradeStation. Well, you can, I'm sure you can go edit the Bollinger Bands on TradeStation and you can have them on your screen, but you won't get the verification of the up and down arrows. You'll just have to do this on your own. That's why this offer is so great, because you'll be able to learn this process by checking your work, having the platform already pre-format the Bollinger Bands, so there's no work on your part, and having the up and down arrows automatically appear so you can know exactly where a signal has been generated, so you'll know how to properly identify them eventually on your own. Okay. Well, it seems there are no more questions. I guess you're already paper trading this. You're already excited. Remember, if there's one last thing I really have to require from all of you, if you're going to use this, please paper trade first. Okay, there's two things I want to require from you. Paper trade this until you fully understand it. Okay, most of my students say, well, Steve, how long do I have to paper trade this? Well, you paper trade until you no longer have any questions, that when any scenario arises, you'll know what to do. Okay. Now remember, we didn't give you the exit rules and we didn't give you the stop placement rules. Those are all included in the course. You can most likely decide right now just by paper trading where you want to place a stop or where you want to exit. It's entirely up to you. But we give you the full course rules with this $14 or $12 offer. So you'll get everything for such a small price. It's really, really a great offer. Okay. There's the link you see right there in front of you. Remember, it's posted on the GoToWebinar column under the chat box. And as we take one last look at our disclaimer here, please, if you're really thinking about taking your trading to the next level, please contact Pro Trader Strategies. Take advantage of this great offer. And I look forward to all of you becoming students of mine in the Strategy 3A course along with the platform. Thank you so much for attending today and taking time out of your Saturday morning. I shall see you next time. Bye-bye.